What's up everybody? Welcome to the Stocks channel. My name is Corey and today the S&P 500 was temporarily in bear market territory and rallied out to close green for the day. Are we satisfying enough downside price targets to get a counter trend rally in this bear market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today in SPY, we were up 0.04%, and intraday we did break to a brand new 52-week low, and we did come down to about 381. And we did finally see buyers stepping in, buying the dip, and closing SPY all the way back up green for the day. So now the number one thing we need to look forward to going into the next couple of weeks is whether or not we are going to see capitulation. Remember, we are at elevated risk for capitulation while we are trading below 393, and we now have 3 days in a row closing below that level, so we are still in the territory where we could see capitulation. Now, I don't think we will see capitulation, but you can never rule it out, and the stock market absolutely doesn't care what I think, so we still need to watch very critical price action. So the number one price action you need to pay attention to is going to be continuing to break below this level at 385. If we fail to see buyers stepping in at 385, we are very likely coming down to 376 and then 370. And yes, we could still go lower than that, and in the capitulation scenario, we likely would. So you're watching some very critical support right around 385, 376, and 370. And below 370, we could likely go all the way down to the 360s. Now you'll notice on the chart, I do have a counter trend rally arrow drawn that takes us all the way back up to SPY 430. And this is the scenario that I am starting to prefer, even though it is going against the trend. I think it is very likely that we are going to see this counter trend rally in the very near future. And I have no problem making that prediction because we are going to follow price action. So in order to see this counter trend rally, we need to see a break back above 393. That is the number one price action trigger you need to pay attention to, because if SPY starts breaking above 393, we are going to snap the downtrend in the short term. If we lose the downtrend in the short term, that will start picking up momentum, and then eventually the bulls will try to come up here to some of these upper resistance levels, and we could start to see that counter trend rally very soon. So if you are following price action, you need to know this level at 393 like the back of your hand. Below that level, you are a lot more cautious of downside, and above that level, you are looking for a counter trend rally. It is that simple, so do not overcomplicate it. As long as SPY is below 393, you are looking for downside price targets at 376 and 370. And if SPY starts breaking above 393, you are looking for strong resistance at 408, 420, and then 430. 430 is going to be an epic battle between bears and bulls for control of this market. And keep in mind, we are in a very strong downtrend, so do not rule out the possibility the bears are not just going to roll over and die and give this market away to the bulls. Right now, this is a downtrend until it's not, so you need to give all benefit of the doubt to the bears, and you need to continue to expect lower highs and lower lows until we get the bullish breakout. So that first bullish breakout is above 393, and then the next bullish breakout is closing at a new daily high above 408. You cannot get bullish any sooner than those price action breakouts, so watch those levels very closely. And if we do start to break above those levels, you need to start preparing for that counter trend rally. It does not get any simpler than that, so watch that critical level very closely and have a plan built around those levels. On the NASDAQ 100 triple Qs, we were negative 0.31% today, but we did bounce off intraday lows that had us all the way down right around 280.5. So you can see it is looking likely that we could still get a double bottom look because we are not closing below the previous lows and we are finding buyers below these levels. Now you do have to remember that today was OPEX, so there was a lot of options expiring, so you can't really trust the price action of what we saw today just based on one day alone. So as long as we have this downtrend, it is still possible we are trending down towards 276 and 269.5. However, there was a price target at 285 that we did satisfy, so there is no guarantee that we have to continue to go lower. So just like on SPY, I gave you some bullish price action to pay attention to. On the triple Qs, you need to watch this critical breakout above 303 and 306. If we start breaking above 303 and 306, we are very likely getting a counter trend rally that could take us up to 318 and then 330. And there will be a lot of bears waiting at those levels. So you cannot get overly bullish until we get a decisive bullish breakout and we start to see higher highs and higher lows. There is no reason to get overly bullish until we see price action confirming that the bulls are back in order and they're starting to fight against the trend. And eventually, if we lose the bear trend, that will be another signal that the bulls are gaining momentum and they're starting to battle back. Right now, this still looks like a buyer strike market, so you need to be very risk off below these critical resistance levels that I just gave you and continue to watch those downside price targets. In the Dow Jones, we were down 0.24%, and intraday the Dow Jones did break below our price target at 308, and we did put in an intraday low just above 306. So as you can see, the Dow Jones has now met all of the price targets, which we had at 310.5 and 308. And if we break below 308, you are looking for this bear market to extend all the way down to 297. Now keep in mind, there is a real possibility meeting these price targets that we are due for that counter trend rally. And on the Dow Jones, that's likely going to take us all the way back up to retest 326 or 333. So watch those critical breakouts. In the Dow Jones, you're looking for a breakout back above 316 to start getting more bullish for the counter trend rally, and still remain cautious while we have the bear trend and we're trading below 316, because it is still possible that we are going to extend for that next leg lower. Remember, I always tell you these are downtrends until they're not, so there is no reason to be getting overly bullish until we see some bullish price action. In the Russell 2000 IWM ETF, we were down 0.25% today, and we did close one of the gaps right there, right around 172.7. And we did find support around that gap fill, and we did close higher for the day, but we still did close below resistance at 178, and we still are in a bear trend. As long as we're in the bear trend, it's possible we're coming down to retest the low at 169 or fill the gap and hit our price target at 165.7. If we break below the gap fill, the next price target's down there at 156, and the first bullish breakout will be above 178 and then getting back above 183. And we're not getting bullish until we see that bullish price action breakout. Remember, these are strong downtrends and strong bear markets, so there's no reason to be getting overly bullish until the price action confirms it. On the ARKK ETF, we were down 1.44%, and we did bounce off of that support level right around $40, and we have not yet fully filled the gap right around 39. From here, if we hold above support at $40 and we come back up to resistance at 47, you're looking for a lower high and a rejection before we come down and hit the price target at 33.7, and you're not getting bullish until we close above 52. So expect to see a lower high and a rejection around the 20 simple moving average, which is currently right around 45. And if we don't get the rejection and we get the bullish breakout, then we can start looking for more bullish setups. But right now it's a strong bear market, and you should be expecting it to trend down towards 33. On the VIX, we were up 0.2%, and we did see the VIX getting crushed for the second day in a row when it tried to break out back above 30. So this is definitely looking more and more bullish. Remember, I told you we can start to get more bullish if we see the VIX putting in a lower high, and so far it does look like the VIX is doing that. So if the VIX does fail to break out and close at a brand new higher high and get up there to VIX levels of 38, and we start to see the VIX getting crushed back down below 24, that will be an extremely bullish development. However, as long as the VIX is above 24 and trading above 25, you need to be cautious of another spike that could take us to capitulation with the VIX reaching 38. So right now, while the VIX is getting crushed in the short term, we still need to watch it very closely because it is still trading at higher lows. On Bitcoin, we're currently down 3.5%. Bitcoin is trading right around 29,000 and still above that support zone at 28,000. Remember, I continue to tell you that I think Bitcoin is going to build a strong foundation of support at 28,000 before we get the impulsive bull rally, and that rally should take us all the way back up to 37,000 and a bullish breakout above 40,000. If we do break down below 28,000, you're looking for a retest of the low at 25,000, and I do think that is going to be the low in Bitcoin before we get the next bull rally. However, if I'm wrong, you need to be prepared for Bitcoin to come all the way back down to $20,000. So these are not levels to be going all in at while we're in a strong bear trend, and we could still reach $20,000. So start accumulating at these levels, but still be prepared to buy lower in the event we come all the way back down to 20K. On NVDA stock, we were down 2.5%, and NVIDIA was trying to break down and go down to that price target at 150, but we did see it bounce off the lower Bollinger Band. However, we are still in the bear trend, and we still do have bearish price action, so you can't rule out the possibility that NVIDIA is trying to get to that price target before earnings. Remember, I do believe that could be the bottom for this stock, and we could get a very impulsive bull rally off of that price target. So you can't get overly bearish as we come into that strong support at 150. Earnings is always a coin flip, so I never suggest gambling through earnings, even though I do believe with a stock this beaten up going into earnings is more than likely going to see a rally, and we could start on a bull trend that takes us all the way back up to start filling some of these gaps above. Bullish price action will be breaking out above 179, breaking 199 and closing above 210, and above 210 we will be bullish. On Tesla stock, we were down 6.42%, and Tesla did break down to a new low, closing below 679, and we're very close to hitting my price target at 620, and we still have the bear trend. At this point in Tesla stock, I would be getting ready to buy the dip right around the 600s because this is likely going to be the low before we see a counter trend rally that could take us all the way back up to $900. However, we still need to follow price action and we can't rule out the possibility we break below 620, so watch that level very closely. Upside resistance will be 700, 762, and 828, and we are very likely going to get a counter trend rally in the very near future, so watch critical support and make sure you are watching for oversold conditions because this could be a great trade setup. On Apple stock, we were up 0.17% today, and we did break below 137 intraday and come down and test some of this support below right around the 130s, but we did not hit the price target at 130. So we do have a very valid price target at 130. However, I do think it's getting a little too oversold and we are due for a dead cat bounce, but we can't rule out the possibility as long as we have the bear trend that Apple is trying to get to the price target at 130. Strong resistance will be right around 143 and 150, and we'll be getting a lot more bullish on a break above 156. As long as we have the bear trend, continue to watch lower support at 137, 134, and 130. On the financial sector, we were down 0.18%, and we still do have bearish price action and a strong bear trend, so we cannot be bullish on the financials at this time. The industrials were down just over 1%, breaking to new 52-week lows intraday, and we are still in a very strong bear trend. The healthcare sector was up 1.22%, getting rejected at the negatively sloping 20 simple moving average, but starting to put a dent in that bear trend. We can get a lot more bullish if we break above the 50 EMA. The energy sector was up 0.43%, closing above all the moving averages and still holding on to the bull trend, and you can stay bullish as long as we're above the support trend line, but you need to be cautious if we break below it, because there could be a correction in the energy sector coming right around the corner. So jumping back over to the S&P 500, we are very close to a potential counter trend rally, and you have very specific price action that I gave you that you need to pay attention to so you know exactly what to do. If we break above 393, that is going to be a lot more bullish in the short term, but as long as we are below 393, you need to be looking for my downside price targets. It's a downtrend until it's not, so don't fight the trend, just follow the price action, and you'll have a lot better time in this market if you just follow price action and stay in the direction of the trend, and don't try to force your will upon the market, because the market doesn't care what you think and the market doesn't care what I think, and that is why we follow price action. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can click on the link in the description of the video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.